Good morning. We're sitting down with Mike Arnold of the Mike Arnold Agency. Thank you for sitting down with me today. Mike, it's recently been reported in several news outlets that both State Farm and Allstate have announced that they're going to stop accepting applications for business in the state of California, particularly on the property and casualty side, citing inflation, challenging environments, reinsurance markets becoming more difficult to find outlets, and then of course rapidly growing catastrophes and exposures. Can you take a moment to just explain that in layman's terms? What does that mean for us here in Virginia?
Right. It's a lot of people ask, why is something going on in California impact our insurance policies here in Virginia? And directly, maybe not so much, but it definitely does indirectly. So as you mentioned, it's been widely reported. I think you were looking at an AP News article out of Los Angeles about those changes where State Farm, the biggest insurance, property and casualty insurer in the United States, made those severe actions, as well as Allstate. But how does it impact? Because of these pressures that carriers are facing, it's not unique to California. These are pressures that are being felt throughout the whole country to varying degrees, obviously, because the actions taken out there have not been taken here to that level of intensity. But we do have, we don't think about wildfires so much in Virginia, but when you look at the East Coast, a lot of carriers have already pulled out of Florida and Louisiana because of the risk of catastrophe with hurricanes. We've had impact of hurricanes all up and down the East Coast, as well as the Northeast, even up in New York. So these, hurricanes, windstorms are definitely catastrophes that are pressures attributed to climate change, global warming. There's no escaping. These things are impacting the book of business. You also, as most complex problems, it's never one thing and it's never one answer. So, another input into this current situation that the carriers are faced with are the financial pressures of inflation. Politics aside, the pandemic, we dumped a considerable amount of money on the demand side of the economy, which led to inflation. Nothing is cheaper. There was a recent article in Realtor magazine that new home costs rising an unparalleled rate, 42% higher, the average new home cost from the 3 years prior. Average cost of building materials jumped 42%. The cost of appliances for a house, paint, flooring, all increased from these financial pressures of inflation. So when you look at the potential for catastrophes, as well as the catastrophes that have already been suffered through climate change, we look at the inflationary pressures, and then there's something called the reinsurer rate. A lot of consumers don't really know that most carriers, it's a way of hedging their potential losses. They will pay premiums to reinsurers in case of a big catastrophe. Well, the reinsurers have concerns because they're looking at all of these factors and the cost of reconstruction and building materials and inflationary pressures, as well as potential catastrophes and the growing losses attributed to catastrophes and climate change. So they've really put pressure on the carriers through direct premium increases, but also instructions that they kind of got to get their house in order. So lastly, on this point, I just want to say, a lot of folks think this is money grabbing, and it's not. These actions are not to keep insurance companies real profitable. It's about keeping them solvent. This is things that are necessary so that they can survive, and we have to have that industry to protect our way of life, to be able to do business, to protect our homes and automobiles and life insurance and all of it.
When I receive my homeowner's declarations page, I've seen a pretty significant jump in the cost of what they're calling my dwelling reconstruction.
Right.
I have a two-part question. The first is quite simply, how does that reconstruction determined? Because when I look at my county assessment, it's not nearly that high. And then there's a line in my declarations page that just simply says replacement costs, and it carries a fee. Do I need to have replacement costs?
Well, I'm going to jump to the second question first because the importance of it. Yes, in my professional opinion, on your homeowner policy, you want replacement cost, because in the absence of replacement cost, you have something called ACV, actual cash value. So if you compare and contrast a little bit, think of an automobile. We all know we buy a brand new car and we drive it off the lot. No matter how often we wash it and keep it in the garage and everything else, it's going to start immediately depreciating. It's going to start depreciating on its way to zero. And years down the road, 3 or 4, 5, 6 years after you bought the car, if it's in an accident, an adjuster is going to look at it, and if it's on average about 70% damaged, cost to repair as compared to its current value, the car is totaled. But the point is that they are going to look at the current value of the car, the actual cash value, to determine how much they're willing to repair it or total it, and that's what the client receives as far as being made whole. It's not how much did you owe on the car, what did you pay for it when it was brand new. So go back over to your homeowner policy. You don't want that kind of claim handling on your home. You don't want, if you have a 25-year-old home, which is not necessarily very old, but you don't want everything depreciated because it's 25 years old. So replacement costs means just that. They're going to, no matter what carrier, if your policy has replacement cost in Virginia, the house is going to be rebuilt with like kind and quality materials in the same footprint, same square footage. To be specific, if you have oak cabinets before the fire, you're going to have oak cabinets reinstalled if you have replacement costs. You have hardwood floors. They're not going to go in with plywood and carpet because they've got to return it to replace it the way it was. So that's a very important coverage to make sure you have on your homeowner policy. As far as how do we determine the amount of coverage, we're not concerned, and we get that a lot. People call and say, hey, my assessment this, and the assessment from the local municipality is, I'm not in the tax business, but they're basically saying, what is the house worth? And as charged to your tax assessment, this is what you owe. We're not concerned with the tax assessment. We're not concerned with the market value. We're not insuring the cost of the land. What we're worried about is, God forbid, a tornado goes through your house or it burns to the ground, the cost to remove the debris and rebuild the house with, hopefully, if you have replacement costs, like kind and quality materials, build it back the way it was. With the same thing with your personal property if you have replacement costs on your personal property. So we're not concerned with the tax assessment. We're concerned with what it costs to rebuild. It's called the reconstruction cost. And most carriers have an internal estimator. It's software that's specific to a zip code type of construction. Is it brick? Is it framed? Is it basement, crawl space, slab, so forth and so on.
With what we've seen in California and with the increase in our homeowners' costs, or the dwelling costs for reconstruction, are we seeing carriers in Virginia taking any steps to limit maybe growth or writing businesses?
Yes, we have. We have seen carriers, they haven't officially turned the switch off, but they are definitely tightening their belt. They're making it on purpose difficult to write new business. Things like having to take in pictures of every bathroom, interior cabinets, get a utility bill to show proof of ownership of every car. They're doing these underwriting. They're raising the bar for underwriting requirements in an effort to choke it down, to turn the spigot, slow it way down, so they can get these cost controls under management.
And I imagine being an independent agency, that gives us the ability, a real option for clients who are concerned. They don't have to stay with that carrier. If it becomes problematic, we can look at others.
Absolutely.
As well.
We always, not only our current clients, but anybody this message gets to. We are an independent agent. We have a variety of carriers, and the fact is, every carrier has a different appetite, and what's a preferred niche with this carrier is not so much with another carrier, and vice versa. So what we don't have to do is force feed everybody into one metric with one company. It's helpful to me, and I believe it is extremely beneficial to the client to have more than one carrier available, so we can tailor-made a protection plan for a family in their account.
Well, I do appreciate it, Mike. Thank you for your time. If someone wanted to reach out to you, what's the best way to get in touch with you?
Always welcome to give a comprehensive care review, and they can call us at 434-295-2692. They can check us out on the web at mikearnoldagency.com. And if they want to send an email to start the process, email me at mike@mikearnoldagency.com. No space, no underscore.